Hi, welcome back to Crypto News. On this channel, we'll keep you updated with the most important news in the crypto market. So if you're into crypto and want to make the most from this market, make sure you subscribe, hit the notification bell. I'm Chloe, your host today. Let's get started. When Bitcoin hit $500,000 in 5 years, what do famous economists discuss and predict about Fed last meeting minutes? Why do Mike Novogratz backtrack his prediction and blaming the Fed rate hikes? What should we do in response to this? Let's figure it out today. Bitcoin predicted to reach $500,000 by Mike Novogratz. 5 months ago, on July 19, Mike Novogratz, CEO of Galaxy Investment Partner, a New York City-based multiple strategy investment firm that focuses on digital assets and blockchain technology, said that Bitcoin, the world's largest digital currency by market capitalization, could hit $500,000 mark in 2027 thanks to increased adoption and outstanding properties. He also noted that the debt-driven global financial system was lowering inflation, the global economy was headed toward a really fast recession, and that regulators were not doing good enough to protect retail investors as institutions were playing with leverage. Whereas Bitcoin could act as a hedge against inflation and as a store of wealth. Therefore, he absolutely believed that the token will hit that level in the next 5 years. Mike Novogratz backtracks his prediction, blaming the Fed's rate hikes. However, now he backtracks his prediction. Instead, he believes that it will take longer than 5 years for Bitcoin to hit $500,000.
So do you still believe that that's possible?
You know, not in 5 years, and I'll tell you why.
He blamed it for the Fed's significant rate hikes. So, how high is the current interest rate? And what effect does it have on the financial markets in general and the crypto market in particular? While waiting for the official announcement from Fed, let's find out the discussions and predictions about the result of Fed last meeting from famous economists. Countdown begins to the Fed last meeting of 2022. What to know this week? Data released monitored most closely to Fed clues include the money job report, which blew expectations for November on Friday, and consumer price index data next out on December 13, as they are two of the most comprehensive economic releases used by officials to set policy. Firstly, let's discuss November job reports. Employment numbers have moderated in recent months, but employers continue to hire at a robust pace, even as the Federal Reserve presses on with its most aggressive monetary tightening campaigns in decades to loosen an extraordinarily tight labor market that has placed upward pressure on wages and contributed to stubborn inflation. Average hour earnings rose 0.6% over month, higher than the prior month and Wall Street expectations. On an annual basis, wages climbed at a higher than expected 5.1%. Independent Advisor Alliance chief investment officer Chris Zaccarelli assumed that a stronger than expected jobs report illustrates the wage problem that the Federal Reserve is facing, and average hour earnings continue to climb, and that wage pressure in conjunction with low unemployment will keep inflation pressures elevated. Federal Reserve final rate setting meeting this year. As things stand, the forecast of a 50 basis point rate increase next week is shared by markets and Wall Street megabanks, and particularly after the views were largely affirmed by Fed Chair Jerome Powell on Wednesday during a speech in Washington, D.C. Monetary policy affects the economy and inflation with uncertain levels, and the full effects of rapid tightening so far are yet to be felt, he said. Thus, it makes sense to moderate the pace of our rate increase as we approach the level of restraint that will be sufficient to bring inflation down. Paul added that time for moderating the pace of rate increases may come as soon as the December meeting, and while expectations for a downshift from 0.75% highs delivered over the past 4 meetings are largely priced in, investors now wonder how much longer the central bank's tightening campaign will last, how high the federal funds rate will go, and how long it will stay there before any cuts. Bank of America projects the terminate rate to reach a range of 5% to 5.25%, a view many of its megabank peers share. Though Bank of America chief economist Mike Novogratz speculated in a call with reporter last week that the rate may go as high as 6% due to the tremendous momentum of the labor market. Risks to our outlook for Fed policy are skewed toward higher terminal rates, given the persistent imbalance between labor supply and labor demand. A slower pace of hikes seems appropriate from a risk management perspective, but strength in labor markets, in our view, likely means the Fed will have to lean in the directions of doing more, not less, to put inflation on a sustainable downward trajectory. The impact of Fed rate hikes on financial markets. While the third quarter has seen results that go largely better than feared, Wall Street strategists have warned of zero earnings growth ahead. In October and November, analysts lower earnings estimate on S&P 500 companies for the fourth quarter by a larger than average margin, according to data from FactSet Research. The bottom-up earnings per share estimate for Q4 decreased by 5.6% to $54.58 from $57.79 between September 30 to November 30. To crypto market, Novogratz said in a recent interview that the Federal Reserve's monetary tightening campaign led by Chairman Jerome Powell has been the key factor that caused Bitcoin price to plunge 63% to just under 17,000 this year. He pointed out that the Fed has raised interest rates by an oversized 75 basis points at each of its last 4 meetings in a bid to crush inflation, which hit 40-year high before easing modestly to 7.7% in October. That has weighed on economic growth and tech stocks as well as digital assets, which are now mired in a brutal storm that some have labeled a crypto winter. The industry has faced a string of high-profile bankruptcies, including asset manager, Three Arrow Capital, lending firms BlockFi and Celsius, and Sam Bankman-Fried's Exchange Ethics, which collapsed last month after suffering a solvency crisis. In general, looking at the analysis and predictions of economists about the crypto market's employment and Fed's last meeting minutes, we can see that the crypto industry is hard to recover, or at least in the most positive way, it will recover really slowly. So let's wait and see what the exact interest rate the Fed will announce. Meanwhile, review your portfolio and make sure it won't be too influenced by the Fed decisions. Besides, beyond the point of view of Mike Novogratz, this hard time in the crypto world is considered a stepping stone to elaborate the dustbin before the bull markets. And Bitcoin is still on its way to reach $500,000, but the process will be slower than expected. In the meantime, remember to take small steps in your investing journey to make sure everything will go well and avoid huge losses. And that's all for today's videos. What do you think about that? If Bitcoin is hard to reach $500,000 in 2027, so when? Share a thought on the comment below. And if you enjoyed this video, you know what to do. Hit the thumbs up button, subscribe button, and also turn on the notification. And I'm Chloe from Crypto News. See you in the next video. Bye!